FOREX 24. FOREX. Currency pair AUD/NZD. The midterm Aussie New Zealander nearly hit our target. It has an offensive coincidence, but in the market you need to be ready for everything and for that too. Now a new buy signal can be formed for this currency pair right now. On the hourly chart, you can see that the price has returned again to the level where it bounced off before. It is near it that bearish candles began to weaken and a rollback is possible here. If we see bullish engulfing on the hourly chart, then this is a good signal to enter this movement with a mathematical expectation of 1 to 3 and higher. Stop loss is below the last bearish candle. If the candlestick breaks through this level, then it is better to refrain from concluding a deal on this currency pair. Currency pair NZD/USD. But the New Zealander just broke through the resistance level. We can see here the breakout of the triangle according to the chart, but since it has already happened, then you need to be extremely careful with this currency pair. What I mean? After such a breakout, the price is likely to go up anyway, unless something inadvertent happens in the market. In this case, I do not consider it advisable to enter on the breakout right now, but you can wait for a pullback to the resistance level, which will become support and make money on further price growth. The problem is that there may not be a rollback, but this is why this is the most conservative way to enter a trade, which is famous for the lowest risks in trading. Also, the price may touch the lines of the triangle which it broke. If there is a merger of the signal with the triangle lines and the support level, then it will be of greater significance for the rest of the market participants, and this will lead to the fulfillment of the self-fulfilling prophecy. Review of the US stock market. We will consider the most correct investment option that this correction gives us. It's about the so-called big tech and fun. Nasdaq Index. The tech index continues to fall for the third day in a row. At the same time, this sector suffers the most against the background of rising bond yields. The logic is simple. Expect inflation and therefore investors dump growth stocks and move into new assets. What happens to the key companies that are part of big tech and why, instead of following everyone else, I recommend buying tech monopolists. Facebook shares. Facebook. An excellent company, a large social network in the world, which also has the well-known Instagram in its ownership and which has made good money selling online advertising. Now the company's shares are at one of the support levels. We can go even lower, but you can never guess exactly when this will happen with a 100% guarantee. The main thing to remember on Facebook is that Mark Zuckerberg's business empire is not limited to Facebook, but there are messengers and other social networks. Whether it is possible to compete with Facebook is unlikely. The main thing to remember here is the fact that the only thing facing Facebook is antitrust proceedings, but given the loyalty of the US Democratic Party, I do not expect this. This risk is present, but it is too low, and in this way you buy a part of the social network that most people in the world use. Apple shares. I know that I have mentioned them too often, but the data is updated in real time and here is new news. The company has broken through the level of $125 per share and prices are rolling further down and down. However, do not panic as other market participants do. From the very beginning, I recommended the Apple company in the medium and long term, which should have prepared us in advance for such turns. What's going on at the moment? Panic. A toughened advertising campaign took place not only in Russia, which brought crowds of newcomers to the exchange. Similar trends are everywhere and naturally all over the world. Beginners prefer to trade not on the basis of technical or fundamental analysis, but on the basis of intuition. It's not hard to guess how it ends for them, but in our case, they provoke new sales and a fall in the shares of good companies. All of this comes against the backdrop of Apple regaining leadership in smartphone sales worldwide. The company regained leadership, earned record profits, and its shares are falling. Rational behavior? Of course not. I also keep Apple stocks in my portfolio, and my advice to you is not to twitch with everyone. We entered a zone of turbulence, where the crowd in fear is doing clearly unreasonable things. Only by keeping your head cold can you win here. Let's wait for the buyouts and see where the price can reverse. We are getting ready to buy their shares on a new drawdown because the company's business itself does not suffer at all. The company is doing well and I am as confident as possible in it. Amazon shares. There is also an interesting opportunity in Amazon. Now the shares of this giant have reached the support level and there they are already being bought back. Jeff Bezos' business resilience is undeniable. A large number of people also use Amazon. A worthy member of the FON group. The main risks that can be faced by Amazon are accusations that they are paying poor wages to their employees, and that they need to raise wages to $15 per hour. But in spite of this, I do not expect that this will hit this company hard, and therefore you can also bet on them. Netflix shares. Also, I would strongly draw your attention to the Netflix company, whose series are in great demand. Until the last reporting, investors doubted the company's ability to continue to make profits and fight back against competitors, but since the last report pleased us, then Netflix shares soared by more than 10%, because everyone immediately wanted to buy this security. COVID will not hit a company's business, and in their niche they have proven they can be sustainable at all times. It is also worth looking into buying from support levels. A pin bar is also formed, which symbolizes the buy-off of the price, but not the fact that the price will push off exactly from this level. The crowd is dumping many stocks, so don't rely on instant rationality in buying a company. Google shares. What else can be said here? Needless to say, this company has an even stronger position in its sector. Now stocks are testing support near $2,000 per share, and I would also take a closer look at this company. The main income is online advertising, which can adapt to all conditions. If a crisis occurs, capital flows from one industry to another, but almost everyone needs advertising. It is due to this that this IT giant has no obvious and significant risks, except, again, an anti-monopoly case, but its risk is quite low, because the destruction of big tech will lead to much more sad consequences. I recommend buying and holding for a year. Big tech conclusion. And now the answer to a legitimate question. Some of you may ask questions by type: why should we buy what is dumped, and not invest, for example, in real estate, the real industrial sector, etc.? I am not saying that you cannot invest. In the next reviews we will also pay attention to other sectors, but I would like to give a detailed answer about why the most conservative investments in the stock market are big tech and FON stocks in particular. The whole point is that their business is sustainable and the coronavirus has not been able to affect their business at all. Now there is a panic and the crowd is dumping shares of excellent companies from the point of view of business, and my heart hurts for these trends. But this is precisely where I see a huge opportunity for making money. Everyone who now sells shares of IT giants in a panic will lose their money due to ignorance and fear, because they came here with the knowledge that you can earn a lot here and that's it. But with us you will not repeat these mistakes, like many of your colleagues, and when the majority will close the year in the red, you will make a profit. But you need to learn and work hard to see trends that others do not see yet.